The currency markets can be unforgiving, so no matter what you do, they will move and leave your trades behind. This is why patience is crucial to success, and in this edition of Trader on the Street Taproom with Sean Lucas, we get a full dose of it. Jim, the guest trader, realized that when volatility is shrinking, opportunities are scarce. And so, you really need to double down and wait for the right moment to make your move. But one bad trade, and suddenly, random spikes can turn your trades around and send you back to square one. It's a trading session where Sean and Jim needed to realign their approach, so that when the markets make their move, their trades were prepared to rake in the profits.
We're gonna look at the Euro USD like usual this morning. It's a holiday, right? So volatility shrink, not because it's a holiday all over the world, but because it's a holiday in the United States, and this is the U.S. session. So we're missing a huge group of traders. The other thing we have to watch out for on holidays is little spikes in the market that are seemingly random. So sometimes you'll get these little movements that come out of nowhere. And so you just have to learn how to work with those little spikes. If we look at what's happening right now, we've got a real slow downtrend. So let's start out by hold on, let me change. I was trading last night with a 0.25 lot size. So I'm going to trade that to a 0.1. And we wait. And this is what we do during holiday trading sessions.
It's kind of like in my business watching paint dry.
Watching paint dry, grass grow. All right, so now it's pushing down on the lower edge of that little support. So we'll see if it breaks it here. Breaks it to the downside. So what it did was what we hoped it would do, and that's pulled back the body underneath those previous two candles on the 5-minute chart. That kind of opens the door for another leg to the downside, but it also could be the second bottom for a support and a turn. So we got to wait on this candle. This is not an action candle. This is something we wait on. Okay, so now it's right at the high of the previous candle. So this is the turning point. I'll draw that turning point in real quick. So the market's going to have to break above that to form an up leg. And then we'll fade that up leg. So we'll first look to enter a couple positions right in here. If not there, we'll definitely add a good position here. And we'll ride that all the way up to here. If we don't get that turn. Actually, we'll just keep riding that short all the way up. The question is, how do you calculate the number of losses or losers that you peel off? Really what I'm looking to do is just peel off a leg, right? So, or one set of trades. So everything I do is done in sets. So set 1 and then set 2 was up here. So really I'm looking to get rid of set 1 with as close to break even as possible, because that's going to give me a chance to reallocate that set. And here we peeled off that second set for a very small profit, just because we're coming into this support area, right? And we expect that market to find some support and make a turn. That's the most natural thing for the market to do. Now, one thing we learned real quickly is that we don't try and predict. I mean, we try and set up a model. The market can do a couple of different things, but we don't try and say it's going to do this, because when you say that, the market will tend to do something different. And then you've got it entrenched in your mind that it's got to do that. And so we can't make our mind, we can't have our mind married to an outcome. That's a recipe for disaster in the market, is when your mind is married to an outcome. The market has to do this outcome, otherwise I can't make any money. That's bad thinking, and it'll cause a whole series of losses, right? So give it a second here. Usually you should get 1 to 2 candles of bullish price movement here. So I wait usually till, if this candle gets a little momentum behind it, then I fade the momentum. If it just, there, right now, right there, put 2 on, 2 shorts. See how those are coming in, profit target above the line.
Mm-hmm.
So don't put any more than that on. Okay, now put another 2 on and wait for this to hit the high of its candle again before you put another 2 on. Add 1 right here, just 1 more, and then we'll call that good at this level. And now we'll wait for that next pop to the higher side. One more thing on this. The chances of it, if it gets into a bullish trend here, the chances of it coming down here and hitting these, not very good. Now we look for second and third candle to build momentum to the upside. So no trade zone though. We don't trade here. There's that second candle, it's building. I got in a little aggressive in that trade. Well, very aggressive in that trade. And so our lot size is pretty high right now. So there's a lot of risk in this trade. Everything's kind of hinging right here.
Mm-hmm.
We're seeing a little bit of a bias shift now. Candles on the long side are getting bigger than the candles on the short side.
Mm-hmm.
So it's popped up, held in the upper range. And it's still holding in the upper range, which should give it an opportunity to make a pop. If you think about it, it's the bull's chance to take charge of the market. But we're bumping up against that one little trend line, that one support. If we can break it, we're good. We'll watch it here. Normally I'd say we'd break it, if it was a good volatility.
Normal day.
And again, normally we would have broke it up here. So it's one way. that lack of volatility gets us one way or another. Man, I keep looking at it and expecting that big candle to break right there.
There you go.
Peel off.
Come on, baby. There you go.
We did it.
We still got 2 or 3 on.
Close out.
Come on, baby.
Close out the rest. We hit our target and we are done. The takeaway, I think, from this session for everyone out in the tap room, I think the takeaway is the holiday trading. I came into this session knowing that we weren't going to get a lot of, we most likely were not going to get a lot of volatility in our trading session today, and that's been true. The second thing is we've kind of moved into more of a consolidating market, so the volatility is even shrunk even more. Without giving us a good bias or a good support from the trend, if that makes sense, for the bias. And so the market's going through this transition zone where it's trying to decide whether it wants to make a move higher or whether it wants to continue what it started this morning in the down leg. My trading session and your trading session for a for a profit check of $1,262.01. So not bad.
Woo!
Could you share something you learned with everyone? What would you say one of your takeaway from this session was?
Just patience is the biggest thing.
But that patience is a key, right? I mean, we have to learn that patience.
Is waiting for the right opportunity. When you see that things are kind of going against you a little bit, making the adjustments, and then having the patience to wait for the market to come to tell you what it's getting ready to do, and just utilizing those tools, it makes all the difference in the world.
Yeah, I agree.
Jim walked away with $1,200 more in his pocket. You could be our next guest trader. Watch the full session by becoming a member of Trader on the Street and get a chance to trade with Sean live and learn while you earn.